So anyway, it gives you some idea of what this is about. So 1, 2, 3, 4, 5, 7 trades on a trend down day. Okay, look at it. But the oscillator told you that. Never went above. I've seen pages like this probably 1,000, 2,000 times. This is a 5-minute chart. So you're talking about an enormous amount of time. This works incredibly well. And I'll give you a little background before I jump off this. In the move we had from March of 03 to November of 07, basically a 5-year bull market, on the weekly chart, the oscillator traded between 44 and 107 for almost 5 years. Okay, can you imagine that? Well, I'm sorry, I'd love to tell you. Mid-June is basically, if you know anything about moving averages, okay, what I'm doing here is, it's a 21 or 20. It's a Fibonacci number. I'm sure most people, I learned it from Lim Livrashti. It is the most effective trend following moving average you can use. This stuff. Guys, I'm sorry. If I miss a question or two, I'm sorry, because I'm trying to pay attention. I said this is the first time, but every once in a while I'll look over there. So anyway, I want to just give you a little background. So for 4 or 5 years, every time the oscillator went to 44, which is an uptrend, you're seeing downtrend, okay, on the weekly, you drop down to the daily, the 30-minute chart, 5 if you're trading S&Ps, 30-minute if you're trading options. You nailed every signal for almost 5 years on every pullback. I don't care how big the pullback was, you nailed it. Then you could drop down to the daily chart. From June of 06 to February of 07, we were straight up 9 months in a row, never broke the 44, 107 trend. We rallied hundreds of points on the S&P, never had a correction greater than 1%. Okay? When the market was crashing in 02, June, July of 02, dropped 400 S&P points in 30 days. The oscillator on the half-hour chart never got above 62. You just shorted every 62, and you made a fortune. 400 points straight down. I mean, that's what we're getting paid for, is to find this kind of action. Okay, potential uptrends, 98 or higher. Potential stays above 44. Okay, so I just showed you the 62 and the -1. Now we're talking uptrends, 98, 107, 44. Okay, this is what an uptrend looks like. Okay, look at this. 107 the whole day on the upside. And look at it, never breaks 44 on the downside. So every time the market touches back to the mid-uni in that area, SOS is sign of strength. Every time the oscillator pulls back to 44, how else can you trade? And look at when the market breaks. This is a Fed day. Look at when the market broke after 2 o'clock to that 40 of the intraday. 38. I use 40-60 because I could do it in my head. When that market breaks below the trend line but closes back up in the trend line, it's still 44. You bought that. You basically stayed long the whole day. I mean, that just gives you an idea. You throw the mid-uni on, you watch the 44s, you watch it, and you could take profits or you just stay long. As long as it's holding the 44, just stay long the whole day. You don't have to trade. Go to the bathroom for 4 hours, go out to lunch, and just look at your thing. You'd see it's still staying there and stay long. This makes it very easy to trade options. These are 5, 6, 7 baggers on options and expiration week. Okay? Now, here's what a stock looks like. I traded Goldman Sachs. Here's a 60-minute chart. Okay? You can use 30. You can use daily. Look at the thing. 107 jammed. Sell it. Every time it hits 44, buy it. Every time it makes higher lows, higher lows, you can buy that whole thing right, and it blew out through there, if I can remember correctly. It works on stock. It's phenomenal. I'm just giving you a simple, that's what I mean. You can just trade oscillator. You don't need really anything else. I think those are moving averages, so you can see how the tight one just follows it up too, kind of giving you a little confirming with the big one in case it pulled back to the big one. But just look at that. 107.44 and uptrend. It's months. That was one of the best trading stocks. It's still one of the best trading stocks out there. Okay? Now, here's a bigger picture. Here's the daily chart I was referring to before. Notice 107, 44, 44, 44, all those circles are 44. If you hit every one of those buys, look at it, how it hugged the 50-day moving average. Every time it get back to 44, you bought it. Every time it went back to 107, you sold it. Okay? That's pretty nice. Then you combine it with Fibonacci numbers, then you have a greater confidence in the level. So you're not just buying a pig in the poke. You are buying a Fibonacci number, a retest failure, divergence, oscillator at 44, any time frame. There are videos about some of this stuff, so you can even learn from the videos. Okay. In trading range, it acts like anything else. I'm not going to go into that because you know trading ranges, okay? Divergence plus crossover occurs when the average line crosses the oscillator. I like that. I like that average closing up close to 89 as possible. I like it to be as close to 10 as possible so that the crossovers are more effective and we've exhausted the power of the move. And I now get some idea of a turn. Okay? And it gives you an idea of a snapback kind of rally. Now, here's what a divergence looks like. Okay, excuse me. Now, we have a bottom. If we look at this, I'll move across to my point. I forgot I had a pointer, guys. Okay, look at this. This is a nice divergence here. Okay, see it? No, the oscillator is the same, but look at price. Price fell apart. Price fell apart. Okay, boy, is that slow. I mean, I'm talking and I'm over, and it's just moving. So the market's making a lower low. The oscillator. This move down bordered on turbo. The only reason it wasn't turbo, it hit 26. But that whole move down was pretty dynamic, well below 62. I think it was most of the time below 44. That was really some jam job going down. Okay? Now, oscillator leading divergence is really interesting because it's very predictive. It's funny. You have price in a trend, uptrend, and you're buying all the higher lows. And guess what? The market goes back to the high, makes a modest new high, fails in front of the high. Okay? And then guess what? The oscillator sticks at 62. Doesn't go from 44 to 107. Guess what? We have leading divergence. The oscillator is halfway down the page, and the price is back to the high. Guess what? That's an 85% probability on a bigger time frame, 65% on the 5-minute chart. Wouldn't you like to kill for something that has an 85% probability of being successful and telling you a trend's coming to an end, enough to buy puts at the top, go short? And this is a big move. This is not just a little move. It's a change in direction. Okay, and then we use the opposite. We use -1 to 62. It comes down from 62, never dropped below 35.44. Price is back in the low window, and the oscillator is halfway up the page. It's pretty impressive. Enormously high probability. Okay? Now, here's an example of leading divergence. See where the market's making in the middle of the page? The oscillator is at 53 and the price is the lowest low. Now, you get a perfect entry if you drop down to the 5-minute chart, but you want to set it up on the 30 because there's an 85% probability of success. Okay, and I am giving you some cherry charts, but this goes on all the time. I'll even show you today, and I'll show you yesterday. I mean, it happens. And anytime if I'm running too fast or whatever it is, let me know. Now, here's an example of my favorite short. This is my favorite short in the bear market. I can't tell you how many times I was short this puppy countrywide. They said it was going out of business. They got saved. They would have been out of business. Look at that high. Market's back to the high. This is what I mean about leading divergence. The oscillator is 107. Price rallies back. Now, here we are making higher highs in the stock, all the way up, trending up beautifully. The market's making higher highs, and the oscillator goes to 62. Boy, I love that. That's when I started shorting that stock. I fell in love with the short side. It just fell apart. Look at that. And then you can see all the other ones going back to 62 as it starts a downtrend. Then you had a little leading divergence when they took that deal with Bank of America where it popped. They put $2 billion in. Thing popped, hit it again. Okay, see, it never took out that 20-bar moving average. Just went right down. Never even got to the 50, 200. Just went right down the page. You love those trades. And the oscillator just confirms it. Okay, again, this is a daily chart. So you're getting an idea of how it works on anything. This just happened to be my favorite short, and I wanted to see how it worked, and it worked. So I put it in the book. Okay? Now, 30-minute only continuation trade. The oscillator. This is an average pin. This is the oscillator, the blue oscillator average. Okay? It trades the same way. It generally trades between, let's say, -1 and, let's for argument, 89, 90. Okay? When it gets pinned up around 85, 90 at the top, okay, or 17 and below on the bottom, and the market reacts. So you have a powerful move. Because to get the average up, the markets have to have a powerful move. So what you want to do is, when you're in that powerful move, you want to know when to re-enter the trend. So that oscillator, that market's going to break. Market's going to gap. Generally, it works really well on gaps. The market gaps down. The average is pinned at the high. Okay? And what happens is, price really corrects. And then it just goes right back again. It's just a one-shot correction, and the price goes right back up again. Okay, and same thing on the downside. And this is just you re-enter the trade. And here's what one looks like on the right-hand side. You can see the oscillator at the top, and then somewhere where it says oscillator at 44, you see the gap down. Okay, right in. Let's see if I can do this right in here. There it goes. Look at that. Boom, boom, boom. Okay, right in here. See the oscillator? I'll drop it down to here. Whoops, I did something wrong there. Okay, there it comes down to 44. Okay, and you can see, whoops, I'm trying to go back up. Okay, but you can see the price was in this range. Power, you can see how the average has been pinned the whole time. Okay, just take these shots against the trend. I mean, with the trend, I'm sorry, just put you back in the trend. Then the market goes on again, then it comes down again, another 40, well, now it goes to oversold down here. So now you're looking at a trading range, but just gives you an idea of a pin trade. I'll figure out how to use that mouse and do a better job. I hope I didn't screw up the charts, because I can't move anything now, guys. I'm lost. You got the wrong guy here. Something. I just did. Okay, thank you. All right, there we go. Now here is a downtrend. Okay, there's a downtrend. Okay, we got it jammed down. Okay, and the price goes back toward the mid, hit 62, automatic sell. See how the oscillator on the lower right here is pinned way down here? The oscillator average is pinned down in here. See, right down in here, the oscillator is pinned. And then even better trade, the retest failure is a better trade right up here. See, retest failure, and then it gets wiped out at the end of the day. See, again, look at it. It's been weak since here, right up here. Since a couple of days before, right up in here. Look at the oscillator. It says it's been weak. See, we never gain above 71.62, the paired trades. Okay? So it gives you an idea. This is what the oscillator and the decline in June, July of 02 looked like. That whole mid-June was just in a slope down trend. Every time it got back to the mid-June, every time it got back to the 62, you just hit it. You didn't even care. Just hit it, and you made a fortune. Okay,